And sticking with the cattle theme, as we mentioned earlier in the show, I took a trip to Briggs Feed Yard this week to visit with Mike Briggs. Last month's Cattle on Feed report shows the placement number to be about 2.5% lower when compared to the 5-year average. So I began my conversation with Mike by getting a sense of how things are looking at his operation.
We're probably about 75–80% full. I'd like to be fuller than that, obviously, because you really don't make much money if you're not over, 75–80% full. So, and I think you're seeing that throughout the industry, and a lot of that is just lack of profitability. People have continually lost money ever since the plant fire in 2019. There's been very little profitability through there, and it's running into people's equity pretty hard, and they can't, and you haven't been unable to purchase a margin. So you're constantly having to go out there and bet on the come and buy a loser and hope the market gets better. And some bankers and some people have just said, enough, I'm done. I'm just gonna sit and wait till this thing straightens out. So that's why you've seen a decrease in placements. Now with the drought, in some parts, cattle have had to come to the feed yard because they're out of feed. I've got cattle coming next week that weren't supposed to come till next month because they're out of grass. So some of these placements are getting packed in. Well, the bad thing about that is when they go out, you're gonna be packed again. We need to get what cattle we have spread out, and so we can get away from this constant bulge of front-end supply.
And you mentioned how some folks are waiting for things to straighten out. When do you think that might be?
I don't know. The packer has done an amazing job. He's got this entire market in a headlock. He can control he can control his throughput, therefore he can control how much meat gets on the market. That's some interesting things we've seen. We've heard my entire career, oh, customers will never pay for it. Customers will never pay for that price. It's gone way past any price we've ever seen in the supermarket. And luckily for us, consumers are still buying it. But unfortunately, the packer is the only one benefiting from that. The feed yard is not benefiting, the rancher is not benefiting, and it's really frustrating. But the packer is able to control what his throughput is, and therefore he's able to control this market.
Okay, with all you've said, any optimism at all from your perspective?
I wish I had some. I'm pretty depressed the last few weeks. Eventually, I'm just not sure when this is, eventually we'll get away from this front-end supply bulge. Maybe it's the end of the fourth quarter, maybe it's clear not till next spring, because it looks like we've slaughtered 2 years in a row, we've slaughtered over 600,000 cows. So now you're down 1.2 million on your available placements. That's gonna show up eventually. I wish I knew when that was, because I could make a lot of money, but maybe we get into the fourth quarter and things even out a little bit. I think by next spring it'll definitely have evened out.
And Mike, we're recording this before the release of the next WASDE report, but USDA has indicated they have enough information to raise both acreage and yield for corn. So thoughts on what that could mean for the cattle guys?
That's going to be really interesting because there's other services that are still saying yield's going to decline. So this report on Friday is going to be kind of key because how many acres are we really going to add? That's not really a shock to me that we're going to add some. How many? That's the interesting thing. This year's crop has been kind of a story of haves and have-nots. Eastern Corn Belt has a record crop. North South Dakota, not so much. Parts of Nebraska, not so much. So it's going to be really interesting to see. Like I said, one of the services I subscribe to says we're going to have a lower yield. If that's the case, this is going to be the bottom end of corn. Now, is it just going to come out of here screaming? No, but it's done going down, and there's only one way for it to go. And if we see some of the export business that we expect because South America had a bad crop, there's another La Nina just like last year developing. So if they have 2 bad crops in a row, we're going to be the only game in town for corn, and you'll see prices of corn work higher.
So yeah, like you said, some parts of Nebraska, the crop isn't looking great, but when you compare that to the Dakotas, it seems like overall Nebraska is positioned pretty well.
I think Nebraska is going to have much lower basis levels than other places because we're going to have the supply of corn. It's going to be interesting to see what these ethanol plants do. They've really backed off on their basis bids the last few weeks, hoping to get here to new crop. I've been paying $1.10 over for corn all summer, somewhere in that range. It dropped to 50 over last week, just that fast. But I think you're still going to see positive basis levels. I don't know if we'll see negative basis levels for a couple more years. It's just a matter of how positive they get. And in some parts of the country, like Texas and Kansas, those are going to be huge basis levels for them to get corn, because they did not have big crops down there, and yet they've got all the cattle on feed. So it's going to be a regional deal.